Hi, welcome to Finance with Justus. I am Justus. Netflix recently released their Q3 earnings, and boy oh boy, they were good. They beat expectations from Wall Street very hard. They added 2.4 million subs year over year and are now at 22.3 million subs, and that's factoring in leaving the Russian market still. I am very surprised by this, and so is Wall Street. Their revenue only grew by 5.9% though, so that is still very slow, especially for a company like Netflix, which is still seen as a growth stock. The CEO is saying they're now in a position of strength versus their competitors. They're saying that all other competitors are probably losing money right now, and they're one of the only ones who are actually making operating profits. I wouldn't call Netflix being in a position of strength though. In Q4, their revenue is only gonna grow by 0.9%. To be fair, that is mainly because of a strong dollar. They said otherwise they would be getting a revenue growth of 9%. But the most important thing here that is probably being missed is them announcing that their lower priced ad-supported plan already launches in 12 countries in November. This is important for especially Netflix. People spend more time on Netflix than on any other streaming giant. So the more they watch, the more they're actually bringing in ad revenue. That is the first year that it's gonna allow the company to actually grow beyond just being reliant on subscriber growth. You gotta think about it before. Netflix had to continuously release good shows just to keep their subscribers watching. And if they didn't sign on any new people, those new big shows didn't actually bring them that much. It was just basically capex that was needed to constantly run the company and run, and they couldn't take any out. That is the problem with Netflix over the last few years. They have had awesome earnings per share growth, but there's no free cash flow because they constantly had to reinvest the earnings into new movies, series, just so that they could keep their current subscriber base. The only outlier here is obviously during the pandemic years. Here they shut down the production of new series, etc. And of course, if you don't produce new series, you had a lot of free cash flow all of a sudden. But if they now have an ad-supported tier, where users watch more and more of new good movies and series, then a good release will impact Netflix income even more. And especially here, Netflix acknowledges that. They're increasing their competitors with that. Because now they're saying, as long as we said we operate in a highly competitive industry. So that was obviously before known. The streaming industry is currently seen as a huge money eater because there are so many alternatives right now. There's not only Netflix anymore, that is long gone. Where instead of only linear TV and streaming being their competitor, now also YouTube, TikTok, gaming and social media. Because now it doesn't matter to Netflix that you keep your account. If you have an ad-supported tier, it's also going to be how much time are you spending on that? Are you going to spend your time on Instagram? Are you gonna spend your time playing games? Now Netflix profits from you watching their shows, especially. So management is basically telling you here, hey, we're transforming the company with this new tier. This might become a huge opportunity for us. And I believe that this is a big opportunity, especially for Netflix. Also, one thing that I'm very happy about is that they finally made free cash flow. They had 472 million of free cash flow instead of minus 106 million last year. Here they expect to achieve over 1 billion in free cash flow for 2022. This is still very low. It is still less than 1% of a market cap. So I don't really see this as a huge free cash flow yield. There's very little share dilution. Shares basically didn't change year over year. The stock is now trading at a forward P of 23, which is very high for a company that is not really growing that much right now. If you think about it, you can buy Google for a way cheaper P and have a way better growth rate. And the biggest issue about Netflix is still they're not converting their net income to free cash flow. They're at a net income of 1.4 billion this quarter. And out of that, they only got free cash flows of 472 billion. That is a very poor free cash flow conversion. So would I say Netflix is now a buy? No, for me it's not a buy. I would say this is a turnaround for Netflix, and the company is at least stopped from declining, which is probably why investors gave Netflix this huge run-up now. Even with the new ad-supported tier, Netflix will still have heavy competition. So until Netflix is not converting their net income to free cash flow, and they're still suffering heavily from competition, I would say I would not invest in Netflix. The stock is way too highly priced for me. It still needs too much of their capital to continue growing and can't be taken out of the business. What do you think about it? Do you own Netflix? Do you think it is worth it? Give me your arguments in the comment, and see you next time.